Look, what were the concerns for the market? Concern number one was the exact date, because it's only closer to the event you would actually see the stock will get repriced. Repriced in terms of what will happen to the, see, it's an institutional dominated stock, and it's an institutional dominated stock. The timing is very important because that's how institutional investors will manage their books. So for example, the local DIs, they will have to balance it out, and they'll have to bring the threshold limit to 10%, because SEBI has only given them a 3-month time window to keep the combined weightage. The combined weightage should not exceed 10%. Similarly, on the MSCI front, now that the date clarity has come through, they will also be coming out with some changes. So why has the stock reacted? I mean, why should a stock react to just the one date? The reason why the stock is reacting to that one date is because you pretty much know that what will be the period in which the institutional books will have to adjust, where the weightages would be increased, where the weightages would be maintained, and what kind of selling would happen. On the global front, such HDFC Ltd and HDFC Bank are global FI dominated stock. Their ownership is more than 70%. I don't think there is a concern. But what we understand is that domestic institutional investors are good old TIIs, hamare local mutual fund. They will have to sell the combined stock worth 5,000 crore in next 3 months. That's not a tall order, but that is something which had become an irritant. But that, I think now markets know that how the time frame will move and how the stock would move. And once you are so close to the merger, it's like saying that the setting on the table is ready, wedding cards have been printed, now the marriage day has been come. So you get excited as a family when there's something new happening in the family. I think that's the same factor.
The family is mighty excited. HDFC Life is up 5%. HDFC already dancing 2%. HDFC Bank higher by about 1.5%. It's really the HDFC group stocks which are doing all the heavy lifting. Even if you were to look at the financial or the Nifty Bank pack, it's largely these names as well, which are the outperforming ones. In fact, let's welcome on board Vishal Malkan and take in his opinion on HDFC Bank as well as HDFC Life, Vishal, which has had an excellent last 10 days.
I think they are having a great day, all the stocks, and thanks to them, we have a green tick on the Nifty as well as Bank Nifty, which were moving sideways and now looks very positive on the sector all. But I would still look at this as a maybe like a date-based or an event-based movement and focus on other stocks which are already in momentum, and they are getting the boost today thanks to HDFC. So I'll go for other stocks apart from this HDFC gang.
Vishal, do you think today's push in HDFC Bank is good enough to take Nifty to a new high?
Yes, I think so, because earlier also I mentioned is that Nifty and Bank Nifty, what we are seeing in the last few days is what we call in technical analysis called time correction. And usually we are looking for price correction, which everybody is waiting since last so many days that every time we see a red candle, we see that, okay, now it's going to go down. But we are experiencing something called time correction. And I think this HDFC move is a fantastic catalyst to take the Nifty in the new zone and finally make that new high, which we are all waiting for.
Naresh, should we continue to focus only on the banking and HDFC Bank connection, or it's time to move on and talk about other stocks? You think we need to stay with it?
So the reason we need to stay with it is because it is 15-17% generally the weight out of the Nifty as well as 25% on the Bank Nifty. We need to see whether post this announcement it can cross 1700. Now 1700, 1730 was the price on the day merger got announced, and we have still not gone back to those prices. We went back a few weeks back and we again corrected from those levels. So the point here to see is whether all this announcements leads to a 1700, 1730 break. If that happens, it can itself give a fillip to the Nifty. So for now, we are still away from that. But one thing is clear that the timeline is getting over and the effects would be visible over the next, say, 2 to 4 weeks. So in this case, the view is if we cross 1700, 1730, it can be a game changer for the index.
What is interesting about today's market action are consumer tech and fintech. Zomato scales higher, Paytm scales higher. Policy Bazaar has gone to 700 already. And Naresh, this is where I at least thought in the morning or last couple of days that they were becoming Humpty Dumpty. But guess what? They are adding more weight. I mean, they are not Humpty Dumpty.
So, say this is a little extension on the short term, but say we've not crossed the recent highs even after today's move for at least Paytm and Zomato. We've done that for PP Fintech. But these three names have made a good enough move in this, say, last few months, wherein they've gone up 30-40%. It's a good time to actually be booking profits out of it and stay aside for some time. It needs some consolidation in terms of time and price. So out here at 900, 950, Paytm looks a little difficult to cross. Same 80 odd levels look difficult for Zomato to cross. So out here I would expect some bit of a pause or a sideways correction. Not very gung-ho here, but would wait out for a dip. The longer term trends are still changing in this case. So wait for a dip, not the time to chase, or rather a time to book some profits.
You've got Delta Corp. And Naresh, has do bhai. Finally Delta Corp. Somebody's had that Delta Corp. Finally, after what, 2 years of Delta Corp, you waited and Delta Corp has moved, Naresh?
Finally, the stock has started.
But you own it or you've sold out?
I've sold out.
It's choices. Moved now.
Doesn't matter. The other stocks which I bought did well. So
what did you buy?
So I've bought a lot of NBFCs in between, so they've done well.
Vishal, I can see a smile on your face.
Yes, yes. As a technical analyst, we always will have some stocks which are doing well because we follow the trend. So of course, the Delta Corp didn't do well in the last year, but now it is doing well. But meanwhile, we had other stocks, as he mentioned, like the NBFCs and the other stocks which are doing well. And especially, I have been focusing more on auto stocks, which have been my favorite in the last couple of, actually 3 months or 4 months. So
two stocks which have bedazzled everybody with their comeback. The word is bedazzled when you get dazed. One is Aurobindo Pharma. Sub 400 has become, what is Aurobindo Pharma? Just bear with me today. Aurobindo Pharma is flat, but in terms of where it was from the 52-week low, it has just hit out of the park. Nobody talked about it. The most under-discussed, the most hated pharma stock of 2021 has become the real darling of this year, 40% up for Aurobindo Pharma. And the second one from the same space, I think, is Metropolis. And there was a time that Metropolis was commanding a P multiple of 60-70 times, heyday of COVID. Then it came cracking down, and from the recent low again, not 52-week, from the recent low, I think it was sub 1200 rupees for Metropolis. It has really shot up like a bazooka. It is at 1500 now. Has the tide turned, Naresh, convincingly for diagnostics, pharma? Because now everybody is talking about the new bull run which has started in them.
So I would be more positive on pharma rather than the diagnostic space. The major top is in place. A cyclical top happened for a lot of these names. But given the extent of correction, so if you look at Metropolis, the stock went all the way to 3500 and came back to 1200. Now, what is interesting is in the bottom of COVID, in March to May 2020, the stock was at 1200. So it's not something where it cannot go back even to just pre-COVID prices. Pre-COVID, the stock used to be at 1600 to 1800. So even if it goes back to 1600 to 1800, that would be a decent move. But will it sustain there? I don't think so. We are getting into a phase of sideways consolidation for this whole sector. A 10-15% pop-up trade, which may or may not happen, is the case here. Same is the case with the Dr. Lal Path Labs or a Thyrocare. There is a bounce back trade in play, but not a structural trade. So one has to be very strict with the stop losses here. So the view is, yes, from 1400, there is possible upside towards 1600. But post that, we could again be getting a sideways zone for Metropolis. But the pharma names could be relatively more interesting.
So that's the take coming in on the pharma names and diagnostic plays. So we'll do one thing, we'll slip into a very short break. But as we do that, listen into the bite coming in from the conversation with the ITC head. They are talking about the levers which are lined up for the FMCG business. Not just that, they're looking at expanding their capacities as well. So listen into that bite and then we'll slip into a very short break.
We believe that this will be certainly be a lot more value accretive with passage of time. We have seen in the last medium term itself that not only has the today our size is 1.5x of pre-COVID. Over a medium term, our margins have expanded by 770 basis points. ROCE has gone up by 1340 points. And we are not there. We are not done as yet. The journey continues. We believe that we will expand margins by, aspiration is about 100 basis points every year. So there's a lot of opportunity there, and we have laid a strong foundation with our trademarks, with our innovation capability, with our digital capability, with our distribution highway. We have not really tapped the potential of exports. They've just started in the short term to put the distribution apparatus in place.
So some of your brands can actually be exported, the one which are made in India.
They're already exported to 60 countries. But the headroom to grow is huge because it's early days.
So just to bring that point again on the FMCG business, you are in the top quartile, certainly top 3 in terms of top line. But in terms of profits, you are not there. In terms of margins, you are not there. When do you think you will be able to reach the top quartile from an industry standpoint? 3 years, 5 years, or more than 5 years?
So let me give you a little perspective on this. Our FMCG business includes a lot of gestating costs for facilities like this, which are designed for scalability, incubation of newer brands. There are certain older brands that are big, and because the older brands are able to make more and more surplus, they're able to offset the gestating costs here. So we are improving, and we will improve by 100 basis points every year. And then on the cost side, also we are pressing the accelerator high. One is, of course, naturally with economies of scale and scope we will gain. The other is, I gave you this example of this facility itself, how we are optimizing logistics, how we are de-layering operations,